Morning, everyone. Welcome to another episode of Bitcoin Brief with your host, Tone Vase. And on today's show, I am joined once again by Jimmy Song. Still out there on the West Coast, family tour?
Well, not exactly. I'm working on a project that I'm really excited about. You'll know more details about it, I think, towards the end of this week, possibly next week. But yeah, it's an exciting project. I'll have more details about it soon.
All right, very cool. Not much new. I didn't do a video yesterday. I know the price of Bitcoin popped last night. I spent like half a day yesterday doing the webinar. The webinar was on risk management, account management, position sizing, basically how to not get wrecked and continue trading the rest of your life if you want. That's what the webinar was about. And it will be available on demand probably by end of next week. All right, guys, let's go to screen share. This one here. Not much to report. We're going to go right into the stories. That workshop is now gone. All I have is Dallas coming up. Jimmy, you'll be in Dallas.
I will. I'm speaking at BitBlock Boom. I will have books available for signing. And there's at least a couple of carnivory dinners, so it's going to be a lot of fun.
Yeah, I signed up for one of them. If there's another one, let me know. I signed up for the Pierre Richard.
There's one Safety is holding that's the night after, and that's going to be the Bitcoin standard carnivory dinner. So that'll be fun too.
Oh, okay. I'll text them. I'll try to get a seat there as well.
Yeah, I haven't signed up for that one yet, but I will very soon. Although,
Safety, if you watch
it.
But yeah, no, that's great. And I'm gonna update my calendar. Man, my travel schedule is always up in the air. Every time I decide on a conference, like another conference, pops up and starts to change my mind. All right. Anyway, let's get on with the stories. Let's start off with we started talking about this earlier, but hey, everyone wants to merge blockchains now. Will this be the trend going into Christmas? Now we have Vitalik Buterin is supporting Bitcoin to an Bitcoin and Ethereum mix as the future of crypto is pluralist. We have new terminology. We have new buzzwords entering the space. Now everyone's going to be a pluralist instead of, multi-blockchains are going to succeed. So this one is specific about using Bitcoin's Lightning transactions inside Ethereum's smart contracts. There's really not much detail on this, but again, where is all this going, right? Like a month ago, it was let's use the Bcash chain to scale Ethereum. Now it's let's use Bitcoin's currency, Bitcoin's Lightning transactions to execute smart contracts. I mean, this is devolving exactly into what we always expected, that your smart contract platform does not and should not need an internal economic component of its own currency that is supposed to provide it security, but it really doesn't because it's a centralized system anyway. I never actually did the fourth episode of Ethereum's crypto scam, but that was what that episode was going to be about. I kept trying to get Saifedean to do it with me, but we just couldn't work it out. It was the whole economic nature. And the way I see this is eventually it's going to devolve. Why do I need to pay for an Ethereum contract with Ethereum? I want to pay for it in a more stable, in a better currency. And eventually you're going to realize, why do I need the Ethereum platform? I have the Bitcoin liquid sidechain. Jimmy, your thoughts on these cross, whatever the hell they are?
Yeah, I think we need to label Vitalik as a crypto pluralist now. He apparently wants to have everything coming into Ethereum instead of doing the logical thing, which is just use Bitcoin instead of all this crap. I mean, this is Vitalik's MO, which is he wants to find any available use case for Ethereum. And this is, I mean, to be fair to him, this is what he should be doing.
He's the CEO of Ethereum. It is his job to make Ethereum investors more money. So everything
Uh-huh.
he does and says has to be to increase the value of Ethereum. It's no different than, any other CEO of his own company.
Yeah, I mean, there are already, I think, derivatives of Ethereum that essentially are centralized versions of Bitcoin or something like that, which, like somebody holds Bitcoin in a trust and then they issue tokens on Ethereum and you could trade, quote unquote, trade Bitcoin in a completely trusted fashion on Ethereum in some way, shape, or form. But I mean, again, it's kind of pointless because there's nothing really useful to do. I mean, other than maybe do atomic swaps on Ethereum, something like that. But I don't really trust their smart contract platform because it's written in a really crappy language, Solidity, which has all sorts of vulnerabilities and has no way to prove that they're safe or has no backdoors or something like that. So in a sense, it's kind of useless. And even if there was something that maybe possibly could be used, and why wouldn't you just use like RSK, which is a sidechain of Bitcoin and has exactly the same language, Solidity, on its sidechain, but doesn't have the Ethereum token. And using that, then you can do whatever else thing that you might be able to do. Now, I don't necessarily think there's anything there. It's a big fat nothing burger as far as I'm concerned. But this is what Vitalik has to do. And I don't know if you noticed, Tone, yesterday, but Ethereum dropped below 0.02 Bitcoin, which is kind of shocking. But this is the sort of stuff that we should expect from someone like Vitalik when the price continues to drop. And, I think it's at its lowest with respect to Bitcoin since like March of 2017. It's only going to get worse and worse, guys, as things go on.
Yeah, no, I'm with you. I'm gonna pull up that chart now. I actually closed it, but I was talking about it recently, saying that unfortunately, according to the TA that I like to use, which is the sequential system, this week is a 9, so it's time for Ethereum to have a bounce. Nothing goes down forever, even scam coins. So it's very likely that Ethereum will have a potential bottom this week, go up a little bit. But Ethereum's in serious, serious trouble. We're going to talk about the Lightning halving probably as our next topic. But from a TA perspective, yeah, it's a little bit oversold against Bitcoin. It can certainly bounce. But it's really bad for a lot of these altcoins and shitcoins because no one is going to be running their nodes because for altruistic reasons. No one is going to be holding their coins for usability. No one's going to be holding their coins for altruistic reasons. Like they have nothing going for them. Once, shit starts to hit the fan, everyone's going to leave. Like there's nothing there. There is no reason to support this thing beyond a specific point. Bitcoin is like light years ahead of all of these other ones in its, I don't want to, what's the word I'm looking for here? Like die hard, like I need Bitcoin and I will always support the system because I wouldn't have like a job, a company or anything like that. And in Ethereum, you can always switch.
Which is what people are doing, right? Like there's a lot of these ICOs that started out on Ethereum that have moved to Tron because they got bribed by Justin Sun or moved to Tezos or somewhere else because they're getting bribed. And I mean I've described a lot of these as like a pyramid scheme where an inverted pyramid with Ethereum on the bottom collecting rent from everybody above it. And everyone else wants to be at the top of that pyramid or whatever, and including Tezos and Tron and all these other guys. I mean, it's going to be a fierce competition, and they're all going to spend lots and lots of money until I don't know. I guess they all go bankrupt and spend other people's money.
Yeah, well, Litecoin bounced yesterday more so than Bitcoin. Because they just had a halving. I believe their halving was probably about 24 hours ago or so. I mean, I'm not really paying attention that closely. Just going to pull up the chart of Litecoin real quick, then we'll go to the article. Come on, load. There it is.
I know. Your computer is slow, man.
It's yeah, I should probably restart it, but it's also I do run a lot of stuff.
Wow, look at that rejection off that trend line. Wow.
I know,
That's
and
crazy. Yeah.
Yep, it got rejected by that moving average, and I really thought it bounced big, but it looks like that's already over. How long did this bounce last? An hour?
Oh, not very long at all. I mean, from what I understand, like as soon as the halving happened, it was totally sell the news time. I mean, the Litecoin halving has been hyped for months, and I mean, if you look at the chart, I think on the daily or the weekly or something like that, you'll see that people were anticipating this halving for a good few months. And you go even further back, and
Oh
in
yeah, yeah, yeah. On
July or
a
whatever.
weekly scale, yeah. I mean, this thing
Yeah.
started to pump.
Mhm.
I mean, a lot. This was probably the halving hype right here,
Uh-huh.
and oh, this is really bad news for Litecoin. And so let's talk about the Litecoin halving. I mean, I've been talking about this for probably a year or two now, in that all of these altcoins, all of these proof of work, uh, altcoins that are created in the same style as Bitcoin, they have a major problem. The halvings wreck their economics because all of these coins, Litecoin, Monero, I think Dash has halvings. I don't know what the hell Decred.
Monero doesn't have halvings. It has a continuous emission function.
Oh,
So
continuous emission.
every block it changes just a little bit.
Um, wait, it changes or just the same amount and it just like decreases over time, based on
I mean, the amount, the block reward decreases every block.
Oh, the block reward decreases every block.
Yeah, it's the continuous emission function instead of
Oh
a.
yeah, no, that's a problem too. That's the same thing. They just took out the shock factor.
Yep,
So
that's right.
any of these proof of work coins that have a finite supply of coins that decrease over time, they have a big problem. I mean, these things are simply inflation on top of Bitcoin. And the only reason they exist is because it's more profitable to mine them and convert it into Bitcoin. But as their emission decreases, their profitability greatly decreases as Bitcoin's value, because of store of value and the fact that there's actually smart people building infrastructure using the Bitcoin underbelly. All of that favors Bitcoin, and this wrecks altcoins. Now that Litecoin has, now that the Litecoin mining reward has been cut in half without any appreciation in its price, it has a big problem because all of those miners will just switch to another script coin that could be more profitable to mine. They have no reason to stay on Litecoin here, and there's absolutely no infrastructure that makes Litecoin useful. I mean, halvings are going to destroy Litecoin. If Litecoin even makes it to the next halving will probably be the last one it ever has that anyone will ever talk about.
Yeah, so you bring up a really good point, which is that a lot of these coins simply have no fee market, right? Like if you're Litecoin, like you could none of the blocks are full, and nobody really has that much motivation to give beyond the minimum fee. Bitcoin is set up so that a lot of the blocks are getting fuller and fuller. So essentially, people are motivated to pay the miners more and more, and the economics of that work out in Bitcoin's favor because by the time the block reward is very small, you have enough fees to make the security work. But in a coin like Litecoin or Bitcoin Cash or whatever, all of them have plenty of block space. And as a result, you don't have a fee market. And as you get these halvings, what ends up happening is that the miners aren't getting subsidized. That reduces the security. That makes it very cheap to attack the coin and to do double spends against it, which means that essentially everybody that takes these coins, even if you're, say, like, an exchange or something, they just make it so that they require more and more confirmations, which in turn causes people to not hold their own coins, but just keep them on an exchange, which increases, more vulnerabilities and makes it much more giant single point of failure, even more centralization. So in essence, what you end up having is having a coin that gets more and more centralized over time. And essentially, what they're going to be forced to do are one of two things that are neither of which are very palatable. You could make the block reward bigger, in which case you are inflating the currency, right? Increasing the supply and not really making it that scarce. Or you could decrease the block size or make the fees higher, in which case there's no real point to your currency in the first place, right? Like your whole mode of existence is, well, we're an alternative to block Bitcoin, and you could do things cheaper. Well, I mean, that one of those two arguments goes away. It's either like pretty scarce or it's cheap to do. You can't have both, and this is what's essentially going to happen with coins.
I don't see your second option as viable at all. Like Litecoin is not gonna. I mean, they could. I mean, they pre-run everything that Bitcoin wants to do. I mean, they can say, "Look, that Junior is right again. We're gonna lower our block size down to 256 kilobytes."
That would be still way too big for Litecoin. I mean, they need to go down to like 30K, like that because. Think about it. Litecoin, first of all, has 2.5-minute blocks, and their blocks are like, they could. I think they have SegWit, so they can basically have 2 megabyte blocks. So it's already like at 8 megabytes relative to Bitcoin. So even if you go down to like 20K, it's like 80K. On Bitcoin, and they have like a very tiny fraction of the volume that Bitcoin does. So
I know nobody uses it. No, nobody uses it.
So even at 80K, you're going to be able to essentially do a lot of transactions for free. I mean, they're going to have to reduce significantly. I mean, Monero had to have like blocks at insanely low, like it was like 25K per block, and they had transactions that were gigantic because of ring signatures, like 2K per transaction. And I mean, they had to have that in order to have like a decent fee market. Now it's a lot better now because they're using bulletproofs and things like that. But it's hard. You're gonna have to reduce significantly in order to make that fee market work. I don't think there's appetite for that on their side, but they're centralized, so who knows what's gonna happen.
But so you just made one really good argument as to why Bitcoin is going to be here to stay, and all of these other altcoins and shitcoins, including Monero. I meant including Litecoin, but obviously including Monero, are going to be going away. But I can give two more. That's just one reason. Is Bitcoin has a fee market because everyone wants to use it, and I know that BSV supporters and Bcash supporters think the fee market is completely crazy, even though the CEOs of their companies know that it's not. But I have two other reasons as to why. First of all, Bitcoin is in such good position as a store of value and being this global demand that Bitcoin may not even need a fee market for another 20 years. Because if the price of Bitcoin continues to rise at this pace, as long as Bitcoin more than doubles every 4 years, then mining will be at least as strong as it is now, right? Like, going into the next halving, if the price of Bitcoin is, there's another article, I didn't even pull it up, but if you go to, if we just go to the front of CoinDesk, I didn't even, maybe I did. Hold on. Is this it? Yeah, there it is. Bitcoin computing power sets a record as over 100,000 new miners go online. And this has nothing to do with the fee market, right? Like the price of Bitcoin rising. And I know that I've been a little skeptical on the price of Bitcoin rising, but not long term. Long term, I do expect one Bitcoin to be hundreds of thousands of dollars, or I wouldn't be doing this daily show with you talking about Bitcoin. And the Bitcoin may not even need a fee market for maybe to the end of our lifetime because of the rise in the value of a Bitcoin. That's one reason. And the other reason is, if everyone is actually using Bitcoin, if Bitcoin becomes critical to your business from an infrastructure perspective, mining Bitcoin to provide the world with a decentralized, immutable payment system becomes a business expense for large businesses. Mining in Bitcoin doesn't even have to be profitable for Bitcoin to succeed. You want to make sure that it's profitable to kind of make sure it succeeds. But I can see a path for the future of Bitcoin success without the profitability of Bitcoin mining. I see enough demand from those that just need Bitcoin or they would be homeless. So they're willing to spend some of the money that they're earning to keep Bitcoin Bitcoin and decentralized.
Well, yeah, and you bring up a good point about like if the price doubles every 4 years, then the profitability for the miner, is essentially the same after the halving. There's also other stuff, right? Like the fact that the technology on mining actually gets better over time. So if the combination of the technology of mining, like if the mining hashing power doubles and the price stays the same, you're essentially going to have the same security after halving as before. So some combination of hashing power on the network and price rise, if either of those, if they multiply together to 2, you essentially have the same level of security as before. So you're right. It might take 20, 40 years before the fee market really needs to develop. And by then, it's possible that like Lightning is like a giant thing, and we might even have something like state chains, so that like you don't even need an on-chain transaction to open a Lightning channel and stuff like that. So there's a lot of ways in which there are a lot of variables that can be tweaked, and all of those are sort of up in the air, and it depends on the innovation that happens at each layer. So we don't really know, but there's a lot of room for optimism here as far as the fee market goes.
All right, very cool. Hey, let's let's talk about this. MIT AI lab analyzed 200,000 Bitcoin transactions and found that only 2% were illicit. Your thoughts on this, Jimmy? Because we all kind of expected it, right? Over time, Bitcoin would be more and more used for legitimate purposes versus illicit purposes. But then you still have, the big debate, with Eric Voskuil. I don't know how familiar you are with Eric Voskuil's presentations. I don't know if you've heard them lately, but he's always referring to that Bitcoin will only be black market money. Bitcoin will never be accepted by any current governments. And I don't know what the world would look like if all of a sudden, most of the governments have collapsed and there's another, giant war where everything is in disarray. I don't know what that does to Bitcoin, whether it helps, whether it hurts. But where is this going, right? Like, it's definitely a good thing overall. But if Bitcoin is only used for non-illicit purposes and world governments have a major crackdown, that's also not great, right? Because it was the gray markets that kind of got Bitcoin where it was today.
Yeah, I see. It's really hard to say how much of it is due to the black market and stuff. And one of the things that I always talk about is what happened in October of 2013, which is when Silk Road got shut down. There was this fear that, because this was the major use case for Bitcoin, that having that shut down would be really bad for Bitcoin. It turned out completely not to be the case. We went on a bull run like never before. We went from something like $100 to $1,000 in the space of 6 weeks, right after that announcement that Ross Ulbricht was arrested. That tells me that illicit purposes isn't the major use case. The people that use it in that way basically buy Bitcoin with cash. They go and buy, I don't know, ecstasy or whatever on the darknet, and then the merchants that have it then convert it back to fiat. So it's kind of like a really crappy credit card that they're using Bitcoin as, and of course, credit cards don't serve that sort of thing. So in a sense, it doesn't surprise me that these quote unquote illicit activities is a very small portion, because those people like just use it like very quickly, but after a while, like for example, marijuana is becoming much more legal all over the world. I mean, a lot of the people that were buying it for weed, like, 6 years ago, they're just like, well, why do I need to pay like a 10x premium? I could just go down to the store and get it, or, get a, doctor's prescription or something like you would in California, and just get like these things are going to shake out towards the side of using Bitcoin as a store of value and not as a method of payment. In a sense, like the darknet markets is a use case, but it's not a very significant use case. And ever since October of 2013, I've thought that must not have been a big use case. Otherwise, the price would have tanked a lot more. It wouldn't have risen like it did. So for me, it's not a surprise. This isn't a surprise. And anyone that says, oh, it's only useful for the dark market, or that store of value isn't a big use case, well, I don't think they're looking at reality, because you ask almost anybody that owns Bitcoin, they're not using it to buy drugs. They're using it because they want to store value, versus something like the US dollar, which is inflating at like 6.75% a year if you look at the M2 money supply.
Yeah, no, I'm with you. I'm with you. Yeah, there's not much to say about it other than, this is a nice, I don't know how factual this really is. I don't know how they know all these Bitcoin transactions. And pretty soon, Bitcoin is going to be anonymous enough that you wouldn't even be able to get this statistic. So it'll be really hard for you to get. I do like the CNBC report that a third of all US $100 bills are used for illicit purposes. So that's 33% of all $100 bills in existence. So that's actually pretty funny. Hey, quick note on this. I don't really want to get into the details of this article. I also think this publication is actually useless because they don't know what's going on. I mean, they state here that he has stated that Ethereum is not a security. That is actually grossly incorrect. An SEC official has stated that in his personal opinion, he thinks Ethereum is sufficiently decentralized to currently not be a security, but that is not a statement of law or fact. But we're not going to go beyond the headline. SEC to run Bitcoin, Ethereum, XRP nodes, and potentially other nodes. I would love to be in the room when the SEC is trying to create an Ethereum node or an XRP node with its first 32,000 blocks missing, but mostly to watch them try to create an Ethereum node and not be able to do so. Now, the comedy of, or Bcash node that I think that was the BSV node that crashed and split their chain into 3 chains. So the comedy of the SEC creating a node aside, what would, and I know you hate regulators, right? But what would a regulator have to potentially gain from having a node is my question to you, Jimmy. Now, we all know that nodes are very useful in Bitcoin because Bitcoin is decentralized. This other stuff is not centralized at all. So what is
It is centralized, not decentralized at all. Yeah. I mean,
well, what's the point? What's the point of a regulator? Is there a point for a regulator to have a node in anything, right? Like them having a node in Bitcoin will teach them how Bitcoin works. Them having a node in any other blockchain is a total waste of my tax money and their resources. They can just make a phone call to the CEO of the damn coin and get whatever the hell they need.
Yeah, I mean, this is kind of like if like PayPal had an API or something to give you all the data about like transactions their customers did. Yeah, of course they're gonna want it, right? Like this is a government regulator. They want the data. They want the data in their database so they can do analysis on it and so on.
No, but why? But why do they? But wait a minute. But why do they need to run a Zcash node? Just call Zuko on the phone. He's already broke. Because they're getting a new fund. Did you see that one? They're starting up a new fund.
Well, no. By running a Zcash node, then they have a record of all the Zcash transactions directly instead of having to call Zuko, right? Like that's kind of the idea. my gut instinct is that what they're doing is they want their own set of data for their own transactions. And the hard part in what's going to happen is that they're going to have to constantly upgrade their nodes for everything else other than Bitcoin. Bitcoin they could just like run forever, like with whatever software they
Or they can just have Zuko send them a daily report.
But all of these other chains, what they're going to quickly realize is that they're going to require more and more resources to run them. So for example, Ethereum, it is not trivial to run an Ethereum node, and it is not trivial to upgrade an Ethereum node. And as we saw with like the whole BSV fiasco, you need right now, in order to run a BSV node, you need something like a $20,000 machine and a lot of bandwidth in order to run a BSV node, because the blocks are just so large and the storage requirements so big that if you're not, and like the CPU validation and the memory that you need, it's so big, you need to spend $20,000 in order to validate that a transaction that you did is actually legit. Now, this may be a part of their strategy too, is that they're going to maybe start imposing fines to these places, and or maybe they're going to do some seizure of some of these tokens, and they need to know that they are actually receiving whatever coin that they're getting. But instead of relying on a central party like like whatever Infura is running or whatever, they want to run their own nodes so they can do it. Now, most people can't. The requirements for doing that are so high, and it's very finicky, and you almost every exchange has like a full-time engineer making sure that their Ethereum node is actually legit, or they just use a shortcut and use Infura or something like that. But it's kind of important that if they like are seizing some Ethereum from somebody for some enforcement action about some ICO or something like that, that they are assured that they actually received the Ethereum, which is probably why they're trying to run their own full node. It will be interesting to note how hard that ends up being, and I feel really sorry for their IT people, because this is not a trivial dealing. Every exchange has to deal with this, and this like keeping the nodes up and running and like updated and all this other stuff is not a trivial endeavor, and hard forks only make that much more difficult.
Yeah, see, people keep thinking that like the nodes and Zcash are like decentralized. No one is running the Zcash nodes. There's like there's nobody running them. Or like, are you running a Zcash node? Like you're not. Like give it like 4 more years. There'll be like maybe a dozen people, and like Zuko will know exactly who they are. Like they're known, they're running it for a reason. They're getting paid from the mining reward or the new mining reward, right? They have it's like Jimmy, it's like you say, like the only people that are running Zcash nodes are basically those that are leeching on the system. What word do you like to use?
Rent seeker.
Rent seeker, exactly. So the rent seekers from the Zcash Foundation are the only ones incentivized to run a Zcash node. That's it.
Yeah, that may be right. And I mean, we saw with the whole BSV fiasco just how many nodes there are. And it's like 461, of which like 200 are completely out of sync with the quote unquote main chain. I mean, that tells you how centralized it is. It's only like 200 nodes, and they all paid like $20,000 to be able to run it. And like stuff like EOS is even worse, right? Like their memory requirements and stuff like that are insanely high in order to like actually validate the transactions, which is done on like sort of a distributed proof of stake or something like that. I remember in order to run a validator node or something like that as a distributed proof of stake signer, it costs something like $100,000 to $200,000 in order to set up that machine. I mean, that's just insane. And this is the road you lead down when you want like giant blocks or something like that. It's that no, you end up having to trust people, and that kind of takes out the entire point of why you're doing a decentralized currency in the first place, and this is what happens.
Yeah, so look at this beauty. This is the price of Zcash versus Bitcoin. It has now fallen to below 0.006. So it's less than 0.6% of a single Bitcoin. And see, this is what happens. So their mining reward is obviously in the currency of Zcash. And while they expect it to get rich and rich and rich for 4 years, they're going to come up way short because the value of one Zcash is now basically shit. And therefore, they're going broke because they decided to pay themselves in monopoly money. And this monopoly money has continued to lose value over time. And, and so they have a problem.
Yeah, and this is the problems Zuko is running into. He wants a new dev subsidy, which is essentially
he wants a new mansion, basically. And unfortunately,
I mean, what he's realizing is that the dev subsidy that he programmed in at the beginning isn't enough because their costs are rising and their coin isn't going up. A lot of these altcoins launched on the premise that people will desire it over time because they quote unquote have scarcity, but it's not decentralized scarcity, right? So he wants to print more money to pay himself, and this is kind of what happens when you run into. This is the dilemma that every central banker goes through when you have. When you're strapped for cash, right? You end up printing money just to survive. And that this is the like Sophie's choice or whatever that every coin's gonna get to, which is that do we just live within our means, which gets lower and lower every time, or do we print more money so we could like keep the party going? Almost everybody wants to keep the party going, so they end up printing more money, which gets into this vicious cycle of their coin getting devalued further and then them printing money. This is how hyperinflation happens in any economy, and this is the fate of almost all of these altcoins, right? Like you can't if your scarcity is not that credible when you have centralization for that reason, because the temptation to print more is always there. And, I mean, right now, Zuko's making the argument, well, as developers, we need to get paid. And otherwise, we're just going to stop working on it. I mean, he's going to kind of make, isn't he motivated to make that decision to...
They're going to print more. They're going to print more
developers, right? Like, otherwise, your government's going to go away. Who's going to build the roads? That sort of thing. It's always been the argument of central bankers.
They're going to print more. I mean, like the value of one Zcash, I mean, it's not at, I don't think it's at yearly lows. Everything kind of bounced with Bitcoin, but yeah, it was down to $46
against the US dollar. Against Bitcoin, it's
right.
Clear.
But again, but they're only going to resort to printing when it's low enough against the US dollar, right? Like if he's paying himself, I don't know, 1,000 Zcash a week or something, right? I mean, that's still, 60 grand a week that he's printing for himself. But once that comes down to like, $10 per Zcash and he's only printing himself $10,000 a week, I mean, the man's got to eat, right? They're going to have to do something. They're going to be printing more currency.
Yeah, and I can't wait for the first ICO to do a secondary coin offering as a way to raise more money for their stupid foundations or something. Somebody's gonna do that, and it'll be an SCO or secondary offering, and they're gonna try to raise more money because their foundations are gonna have run out of money. This is gonna happen in the next couple of years, and again, when you have centralization. Inflation or like printing more is always on the table. Like, don't let anyone deceive you into thinking, okay, well, we're never going to print it. Don't believe them. They're politicians, right? Like, the temptation is always there. So that's,
Yeah.
What can I say?
Yeah, one last note on this, because it applies to Litecoin and also Zcash and all the other proof of work and even proof of stake coins. Look, we're about to have another one. I want to say it early because I thought of it like yesterday, and I'm like, this is probably happening, especially in Litecoin, right? Now that Litecoin had a halving, if Litecoin goes significantly lower than this value, if Litecoin, comes back down to that $20 range while Bitcoin is rising, and a bunch of Lightning hash rate about to come off the network because of the halving and they're not getting rewarded, Litecoin is at a serious risk of a 51% attack, a serious risk, because I always thought that, hey, if you quickly 51% attack Litecoin, you can move that value into Bitcoin and get away with a bunch of money. That's always been my reason as to why someone would potentially risk losing money on 51% attacking a popular altcoin like a Litecoin, or, well, Zcash is down to number 26 on CoinMarketCap, so I don't know how popular that is anymore. But here's another reason. The first top 10 crypto to actually be 51% attacked, let's say a Litecoin, like really attacked, not like 3 of our miners got together and we returned money from a hacker. That's kind of like, that's still a 51% attack. It shows that your currency is shit, but at least you have a altruistic reason to explain it away, right? So I'm talking about a 51% sustainable attack for like 3 days, where that someone is spending millions of dollars destroying your chain. Why would somebody do that? And I was thinking about that the other day, and here's my reason. If you 51% attack Litecoin sometime this year, there's still enough Litecoin out there to panic the entire Litecoin community. And if they're going to panic into Bitcoin. So taking out a proper 100x long on Bitcoin and spending millions of dollars destroying the Litecoin chain can make you more money on the panic exodus of the Litecoin faithfuls, because there are still some there. So there are other, economic vectors to destroy Litecoin for a profit, something that Bitcoin doesn't actually have, because it's hard to short Bitcoin and profit from it. You can short Bitcoin at 100x and profit in Bitcoin, but if you're destroying Bitcoin, you're profiting in nothing, right? Because the value of your profit goes down. Thoughts, Jimmy?
Yeah, so here's the big difference between a 51% attack on Bitcoin versus a 51% attack on something like Litecoin. So with a 51% attack on Bitcoin, you really only screw over like one exchange or something like that. The liquidity on Bitcoin is such that it's very hard to get large quantities of it without destroying your own Bitcoin's value. But like you said, Tone, with something like Litecoin, so if you try to 51% attack on Bitcoin, this is what's going to happen. You accumulate, say, like 10,000 Bitcoins, and you try to double spend it using like a 51% attack. So you deposit it to an exchange, you convert it to fiat or something, and then you withdraw it, and then you reorg the entire chain so that you get the Bitcoins back. And at that point, like, the exchange is more or less screwed. Now, everybody else around Bitcoin is, I think this would be the reaction, and it's a little bit surprising, but this is what we've seen, is they're kind of going to be like, well, okay, it wasn't my Bitcoin, I don't really care. I mean, that exchange is screwed, but they just didn't do enough confirmations or whatever. And those 10,000 Bitcoins that got sold, they get absorbed into the market. The liquidity is such that it's fine. I mean, there might be a slight dip, but it's not like catastrophic. Now, if you do the same thing on Litecoin, here's what happens. You do a 51, so you accumulate a large amount of Litecoin, and it's going to be significantly more to make it worthwhile. But I mean, you say you accumulate over a long period of time, like say something like 1 million Litecoin, And then you go, or I mean, 100,000 Litecoin. Let's just say that much. And then you go ahead and put it to an exchange. You sell all the Litecoin for Bitcoin. You take out the Bitcoin. First of all, that process is a lot easier, right? Like converting to Bitcoin and taking it out. That's it's two different chains. It's not fiat, which takes like 6 days or something like that to withdraw, especially in large amounts. And most exchanges have limits per day anyway, so it's going to be
wait and just wait till there are atomic swaps.
Yeah. Well, so you're going to be able to get it out fairly quickly. Now, instead of like a 400 block reorg, which you're going to have to do on Bitcoin, assuming you get the fiat money out, you only have to do like a 10 block reorg on Litecoin. Now, once you do that 10 block reorg, you get the 100,000 Litecoin back. And then, people might have the same reaction at that point. Oh, who cares? It wasn't my Litecoin. Well, 100,000 Litecoin just sold on the market. You are losing a ton of money over Bitcoin, right? Like, because that's a larger portion of Litecoin than 10,000 Bitcoin was of all the Bitcoin that exists. In addition, the additional 100,000, they're going to deposit to another exchange, and then they'll sell those so they can get that back in Bitcoin. That's how they're going to make money. So you have essentially significant sell pressure on Litecoin, and you wreck one exchange in terms of Litecoin, or I mean multiple exchanges or whatever. And in addition to that, you're going to have all of this other sell pressure, which is going to be like horrible for the coin. It's going to be a much larger portion of Litecoin, so it'll like completely crash the
but
Bitcoin. It's going to be a smaller amount.
But also look at it from the Bitcoin perspective. This makes the price of Bitcoin rise, and if you're the one doing this, you can profit because you know a rise in Bitcoin is coming from the Litecoin exodus, right? So you can
so it'll panic more people, and it could it could get seriously bad.
And you can pre-run that trade in the Bitcoin's futures markets legally on the CME, and or 100x on multiple crypto exchanges, or as we thought would happen this week on the Ledger X, but there was a little bit of a disagreement with the SEC, the CFTC, and Ledger X was not able to get their physically settled Bitcoin futures ahead of BACT. This caused the CEO of Ledger X, Paul Cho, very, very upset, where he said on Twitter, also I have recordings for this type of thing, and I am going to release all of them on Twitter until the government does their fucking job. This usually does not bode well for companies, especially, maybe it's okay for Jeff Bezos to say something like this, but I would not have advised this path of action. But apparently the CFTC did not give final approval to Ledger X to do their physically settled Bitcoin futures. Again, none of these things, neither BACT nor Ledger X, is going to have a big influence because the CME is where it's at with the futures liquidity. And if you want your physical Bitcoin, there's a dozen other places where you can currently buy them. You can buy them from Coinbase. God help you, though. You also have Gemini and many, many others that will sell you Bitcoin legally in the US. So that's just a quick follow-up. I'm done with the stories, Jimmy. You can say your goodbyes, you can pull up your website, or you can stick around for price. Your call.
Well, I am curious about one thing. If you want to pull up there's my book. So I do encourage you to go buy that. But I do have a question, though, and I don't know. I want you to take a look at the weekly chart for Bitcoin, which that is. And zoom out a little bit, so we could see the bottom of the current uptrend. So from about, I think, April 1st, that 9 down candle on April 1st, all the way up to right about this week, if you draw a line, there seems to be a pretty strong trend line there. I'm not sure. Is this a log scale?
It is in log scale. We can change the scale to be a linear scale.
Yeah, log is great. But if you look at that trend line,
So the trend line was broken to the downside. That particular trend line was broken to the downside. We are now coming back up to that trend line from the bottom. Because if I draw the trend line this way, it doesn't really touch that much. It only touches 1, 2, and 3. I mean, look, the trend is now pretty strong. I like the fact that, today is only Monday, right? But if we assume that we will close at this level, if we assume we will close in the $12,000 range, this is going to be, one of the top 10 highest closes in Bitcoin history. So that's a good sign.
Yeah, I mean, not only that, but if you sort of look at that, like the uptrend there, and if we break to the upside on that, then I mean that's a giant upward move. I don't know. I was just looking at it. It does only touch 3 points, and I know with your TA you need to touch at least a couple.
Yeah, I want to touch a few more points. I mean, to me, this upwards trend line was broken, which is why I was anticipating a little bit more downside. But right now, this is a positive week, and let's see where we close. But right now, on a weekly scale, I'm not bullish yet. But on a daily scale, I've been bullish, right? I mean, I've been bullish on a daily scale since we hit this 9. I only anticipated the bullish move to kind of end around 10,500. But by breaking above 10,500, I am now very bullish into more upside on a daily scale. This is a really huge candle. And now I'm looking for at least 3 more days of upside, though that upside could be in the form of a pullback. I mean, the upside just has to stay above yesterday's price, and then it's technically still upside. So my daily chart remains bullish, the reverse right off that 9. I was anticipating a 1 to 4 candle correction to the upside, followed by more downside. When that doesn't happen, I then become bullish. I had this green line drawn for a while where on the last couple of videos, I said, hey, if we can get above this, if we can get above 11,000, I become bullish. And this was the arrow that I had drawn for a while. I am now anticipating the break of all-time highs is more likely, not all-time highs, sorry, the break of these swing highs is more likely. And after that, the break of all-time highs is getting to be pretty likely. And going below 9,000 has become a lot less likely. So I'm now more than 50% confident that we are going to go higher. The 12-hour chart, that was the 12-hour chart. The 4-hour chart is running into a point of resistance, and a 9 is coming next candle. So I would be a little bit careful here using the 4-hour chart. It looks like Bitcoin might be in for a pullback. This is actually a really cool looking channel where we perfectly touched here and here. We came up short on the low end, but now we went straight up and hit the top end. I think this is a decent resistance point right here with a 9 coming next candle. So I can certainly see a pullback down to like the 10,500 range. But the weekly and the daily is still pretty strong. And the weekly, if it continues into next week, the bullish trade activates next week upon the break of this week's high, if we continue going higher. That's pretty much it. The 1-hour chart, just out of curiosity, it's consolidating at the top, which usually means more upside, but the 4-hour chart may have something to say about that. Litecoin, Ethereum, Zcash, we already took a look at. I'm putting this chart together. I saw somebody on Twitter with it, and I thought it was kind of cool looking. So if we just go to the beginning of the year, the blue is Bitcoin and everything else are the popular shit coins. I don't know how to get labels on here, but you can see the other coins. It looks like Litecoin is the only one that's also made money this year versus Bitcoin. So it's up. So this is Bitcoin versus the dollar, and this is Litecoin versus Bitcoin. So Litecoin actually outperformed Bitcoin for the year by 1.4%. And honestly, that's literally just because of today, right? If I did this chart yesterday, it wouldn't be there because Litecoin popped on this move. So give it another, I don't know, day or two, and it'll probably be in the red as well. But then look at the percentages of all the other popular altcoins. Ethereum, Bcash, well, the popularity there is debatable. Ripple, EOS, Monero, and all of them are down at least between 30 and 70%.
Wow, that's pretty insane against Bitcoin. Yeah,
against Bitcoin for the year. Yeah.
Yeah, and this is something that we've talked about for a long time. A lot of people have been anticipating some sort of like an altcoin run, but I'm not sure that the markets will respond that way on this bull run, especially because the people that we're expecting to come in on the next bull run is a lot of institutions and bigger fish that tend to do a lot more research and aren't comfortable with sort of the levels of liquidity that you have on a lot of these alts. So we'll see what happens, but it's looking like Bitcoin is really separating from the pack.
I was gonna pull up the coin market cap chart, but that's okay. It'll take a little while to load. The stock market took a big nosedive today. That was the interesting part to me. So the futures are down huge today. This is a pretty decent pullback in the S&P. Now, you don't really have much to worry about unless we fall below 2750. So we still have 100 points down to go. I know we already fell 150, but we have to fall another 100. We have to break the prior low. Or as it stands right now, this is the, daily chart for the year. As it stands right now, we still make higher highs and higher lows. If I zoom out the current chart, this is just the last couple of years, right? So here we are in the last 3 years of the S&P 500, and yes, it's a bit of a fall, but it's nothing out of the ordinary. We had much bigger falls in early 2018, in second half of 2019. And until this falls below 2750, I'm not overly concerned about it. You're on a 5 of 9. There might be an awesome buying opportunity of the stock market in about 4 days, so later this week. The weekly chart has a big gap, a little troublesome, but the weekly chart is definitely in a defensive mode. So those that are trading equities, finding companies to short would have been great. Here is Budweiser. I think on Friday we found this guy. Here is a 9 right at the high. This is the daily chart of Budweiser. Look at this monster run up. It has topped on 9s before. You can see it right here back in April. Tops on a 9 daily. If you flip over to the weekly chart, it topped on a 913 weekly just this past week. These are the kinds of shorting opportunities you want to find in a market that is dropping. Trying to remember some of the other ones we were looking at before, but yeah, I'm not sure why this guy's here. Oh, that's probably because of a daily chart. That would have been tough to trade. But anyway, I think the show has lasted long enough. I'll take a look at stocks another time. I know they're moving. Tomorrow, I might do a little bit of a longer show, and we'll cover some of the stocks. I know Netflix has been interesting. Yep, I pretty much went bearish Netflix in recent videos. It had its 1 to 4 candle correction off the 9. It looked very strong. This is what I expected Bitcoin to do, by the way. I mean, my views on trading this indicator are the same. Here is Netflix dropping, hitting a 9. I'm like, well, if it's going to rise off a 9, I'm assuming a 1 to 4 candle correction into a point of resistance, followed by more downside and the break of prior swing low, which creates a very, very bearish environment as we are in right now. If this had broken to the upside with another candle, I am now bullish to potentially new highs. Comparing this to Bitcoin as when we went off that 9, great, 1 to 4 candle upside, hits resistance. I'm anticipating more downside. When it doesn't happen, you become a bull. So there you go. Take your profits here. If you jumped on a short trade early, got to take that early stop loss, flip it to a long trade. In Netflix, it worked out perfectly. Take the short trade off the correction, and now you're in a 4 of 9 setup, 6 of 13 countdown. Plenty of downside in this bad boy. All right. I'm going to go ahead and leave it here. Please check out tonebase.com. The next in-person workshop on how to make your own decisions in trading will be in Dallas. I don't have any other in-person workshops planned. I am putting together an options 2-day, 16-hour webinar. It is 0.3 Bitcoin, which suddenly become a lot more expensive than it was a week ago when I posted it up here. But I like to denominate in Bitcoin. The price will stay for now. If Bitcoin goes to new all-time highs, I may potentially reconsider. We will see based on how many people sign up. That's it for me. Check out the calendar. I'm going to finally make my travel decisions this week. I know I've been saying that for like a month. And conferences, Unconfiscatable. Jimmy will be there. The dates are set. We're going to start taking registrations later this month. A carnivory dinner, of course, another poker game. It might be a little, there might be a few changes there. I will tell you all about it. But the poker game is coming back as well. The dates are February 20 to 23. And the financial summit in Bali, once again, was a lot cheaper a few days ago or a week ago or 2 weeks ago. A little more expensive now. And please check it out. It's at a very high-end resort. Here are all your amenities. We have 2 more speakers confirmed. I will be making up their, we will be making up their descriptions, and we'll be adding pictures in here. So that's going to be great. All right, guys. Thank you all for watching. I'm going to stop the screen share. And Jimmy, thanks again for joining.
Yeah, well, thanks for having me. And this song is done.
Bye, guys. Good luck trading.